All right, welcome everyone to another live stream. Hopefully you all are doing great. We're going to go through the markets. We're going to go through some updates regarding the US economy and how it will affect the crypto markets. So make sure to leave a like on the live stream if you're watching this after it's live. Make sure to subscribe to the channel as well. And let's jump straight into it. So we're on CoinMarketCap and you can see that the crypto market is not in its best shape. But this is definitely a good opportunity to DCA into some of the coins that you may have bought on local tops. I would look into coins like Solana. If you're looking at safe options, then Solana. You have Chainlink. I would definitely look at Sui, maybe Avalanche if you wanna go into gaming and L1s. Then Avalanche is a really good pick. Just 1 second. I might have to change something real quick. I'm not sure why my mouse isn't showing up on the screen, but I think I can do that later. It's not that important. So like I said, Sui, you can look at Uniswap. This also does pump time from time quite a bit. And this is the latest coin that we're gonna do a video on Patreon regarding Canton. One of the top RWA coins in the space at the moment. So if you're on Patreon, then that's gonna be dropping in later tonight. BitTensor is something that I would look into as well. Near Protocol, definitely something to keep in mind. So there's a few good options you can go for, and Ondo as well. So this is just going outside the top 50 barely. So these are the few good coins, safe coins that you might want to be looking into if you want to take advantage of this correction. So let's start going through some of the news here, and then we'll switch over into the updates regarding the US economy, the labor market, inflation, and so on. So we did cover this on the previous live stream, but the Federal Reserve will be injecting more money into the markets, and they're set to inject $16.3 billion next week. This is in accordance to the schedule that we shared already in our last live stream. So they're going to be injecting on the 6th of January, $8.165 billion, and they'll be injecting, actually they do give you a range here of the maturity range. So this is essentially, from what I understand, is when this might have an effect. I'm not sure, to be honest. I have to be honest, I don't know what maturity range means. I would assume that means when it will have an effect on the markets, but if you know what that means, just let me know. And then January 8th, another $8.165 billion. So this is massive, and the money printers are already back on, and this is much earlier, much sooner than most people anticipated. And this is a good thing because the assets against the US dollar will continue rising because the US dollar is getting deflated, or rather inflated, not deflated. Deflation is not something that these guys are interested in. And the EU is putting out their Christmas video, whatever, congratulations, but they're talking about the digital euro, and this is something that a lot of people are worried about. If you're in Europe, crypto is definitely going to be tighter. It's going to be much harder to be less controlled, if we can put it that way. But Europe is pushing CBDCs, and this is something that we have to fight against because most people do not want CBDCs. A lot of people are ignorant about CBDCs. They don't know what that is, or a few years ago people would call others conspiracy theorists simply because they predicted that we might be having these CBDCs that the government would be in full control of. And at any point in time, if they don't like you, they can shut off your account, they can burn the money that's in your account, and you won't be able to do anything about it. So if you're in Europe, then definitely be careful regarding this. And this is a really interesting video here. We're gonna give it a listen.
The value of assets, and once the money supply goes up, the first thing that goes up is the value of asset prices. So the stock market boomed, real estate boomed, land prices boomed, all commodities boomed, and who has assets? Rich people have assets. Mm-hmm. And at the start, this is a shocker now. At the start of 2020, billionaires' wealth as a percent of GDP was 14.1%. Now it's 22.7%. So the biggest creator of income inequality in the United States is the Fed. So once the money supply goes up,
so essentially this is an economics scholar, an economist, and he's just talking about how the Federal Reserve is essentially a universal basic income for the elite. Okay, so as of the start of 2020, billionaires' wealth was 14.1% of the GDP. Now it's 22.7%. Just 5 years later, it went up by more than 50%. The biggest creator of income inequality in the United States is the Federal Reserve. That's not even part of the government, which is the funniest thing ever, right? The irony is deafening. I don't know if that's a term, actually, if that's a saying, but it is now. So I know a lot of you guys know about Arkham. They're a great project, and they do put out a lot of interesting articles. This is one of them regarding the Clarity Act, everything we know. So the Clarity Act is currently making its way through the Senate after being passed by the House of Representatives in July. Here's all the key things to know. The Digital Asset Market Clarity Act is a crypto market structure bill championed by Donald Trump that is currently being reviewed and amended before moving to a full floor vote. In the US Senate, it was passed with bipartisan support with a vote of 294 to 134 by the House of Representatives in July. So almost 300 were in favor with less than 150 against. Proponents of the act say that it will help protect consumers, encourage innovation in the crypto industry, provide incentives to investors and builders, and maintain the US's lead in crypto. In this article, we will explain some of the key features of the Clarity Act. Commodities, securities, stablecoins, as the headline for the next paragraph. The aptly named Clarity Act's key feature is that it creates a clear framework for the various different types of digital assets. And this is very important because a lot of people and a lot of institutions have been on the sidelines waiting for something like this, because they're not going to get into something when there's no clarity, when there's no government involvement, because they want to protect their assets and they don't want to get in trouble with the government. They have no incentive to do that because they're already set with money. They don't have to take on additional risk. Now, once that is gone and we actually have some government regulation, they're going to start going into the markets, right? Wall Street is going to start going into the markets, and those people are smart. They are going to invest into projects that have potentially a future, that are likely to have some profits. So you definitely want to be keeping an eye on these big players entering the markets, and you want to see what projects they're talking about, referring to, and what projects are they buying. So importantly, digital assets defined as commodities will have oversight from the CFTC, Commodity Futures Trading Commission. The US Senate just approved crypto-friendly Michael Selig to lead the CFTC. Securities, on the other hand, will have to be under the oversight of the SEC. The maturity test, consumer protection. Let's take a look at the consumer protection here. The bill introduces various new measures designed to protect consumers. Key among these is customer funds segregation stipulation. This requires exchanges and brokers to separate customer funds from their own operational assets, which is very important because if you remember what happened with FTX back in November 2022 is they were trading with customer funds. This policy is directly linked to the FTX. Oh, I just brought it up with the FTX collapse where customers' funds were essentially being traded with. The bill also protects consumers by requiring more risk management from exchanges and brokers, whilst also requiring them to conform to anti-money laundering rules. Fostering innovation. Conclusion. The bill represents a shift toward a data-driven regulatory environment for crypto. The bill moves the industry away from ambiguous legal arguments and toward verifiable on-chain proof. Decentralization and transparency will have legal definitions with significant implications, and blockchain intelligence will become a critical tool. Many believe this will help foster an even more innovative industry as it continues to move into the mainstream. The Senate Banking Committee is currently finalizing its amendments to the bill. White House crypto czar David Sachs has suggested that the bill is on track for a final floor vote and passage in January 2026. And this could potentially be a driving factor for the markets to start moving up. And as we know, the more money comes into the markets, the higher the prices. So if there's going to be demand, then logically you will be expecting a move to the upside. But again, we can't predict the future here. So taking a look at this post from Pumpius, and this has been all over XRP, Twitter feed, you could say, but essentially Ripple is setting up a Ripple National Trust Bank, and a lot of people are calling this out, and they're saying that this is, completely going against crypto. And those who have done at least some research into Ripple, they know that these guys don't even consider themselves a crypto really, and they have always been a bank essentially, right? In quotations. So Ripple Labs has filed an integrancy application to establish Ripple National Trust Bank in the United States, a federally regulated trust bank, not an exchange, not a workaround, not a partnership, a bank. This is public. The application cleared days ago, and almost nobody is talking about what this actually means. Here is the part you are not supposed to dwell into for too long. A U.S. trust bank operates inside the same legal and supervisory framework as the traditional financial system. That means Ripple can custody digital assets at an institutional level without relying on third parties. It means direct access to U.S. banking infrastructure. It means liquidity can move without intermediaries. It means compliance is no longer something Ripple responds to. It is something Ripple is built on. So these guys are essentially moving into government level or elite level of banking, which I think was their goal long term. They just wanted to get this situation with the SEC out of the way, and this was their logical next step. But no other crypto project is this far along in becoming an actual regulated financial entity in the United States. So again, this could mean that XRP is going to go up in value. Obviously, this could mean that XRP, what if it becomes the second biggest crypto, which I don't think is going to, become higher or bigger than Ethereum, but it could definitely secure its third spot if this ends up being, huge. We'll see. We'll see what happens, but this is definitely something you want to keep in mind. Again, I'm not saying you should buy XRP. Personally, I don't have any XRP. The last time I bought it was back in 2021, and I sold it with minimum profit, I think. I can't even remember. But right now, XRP is sitting on the 5th spot, right below BNB, and essentially they're trading spots with BNB all the time, 111 to 114 billion dollar market caps. Tether is currently on the 3rd spot. We can exclude Tether, right? So BNB is technically the 3rd crypto and XRP is the 4th. So yeah, XRP can take out BNB out of the equation if it just, explodes in demand after what we saw. All right, this is another post coming from Mike Brown. He's just some crypto guy here doing crypto posts, but this is his thesis Altcoins have all the right conditions in place right now, a pro-crypto political environment, quantitative tightening coming to an end, which it already did. This is coming from December 23rd. Maybe he isn't up to date on the news. Liquidity flowing back in from the Fed. The SEC moving toward clearer, more crypto-friendly regulation. ETF approvals, growing institutional and banking involvement. And yet, despite all of this, the prices keep sliding almost daily. And this is another sign that there's probably manipulation involved, right? I mean, this goes without saying, the markets are manipulated. And I do think there will be a crypto altcoin rally in the first half of 2026. And we'll see what happens. I personally am still holding my crypto. Like I said, if you don't invest, your life savings into crypto and you don't trade with what you cannot afford to lose, then you're going to be stressed out all the time. You're going to go gray, essentially. Your hair is going to turn gray in a year and you'll look like the oldest 25-year-old of all time. But if you want to do it the healthy way, just invest an amount that you can afford to lose, or dollar cost average into Bitcoin and your coins on a weekly basis. And, don't go to the extreme length is all I'm saying. Now, touching on Europe again, crypto regulation coming to Spain. I know Portugal is a country that a lot of crypto investors like going to. I know it's not as easy to get golden visas now as it was before, but this is Spain, which is the neighboring country, and there will be more compliance. Serious players will survive. So they're talking about the MiCA licensing or shutdown. This means that exchanges have to get the MiCA license, and DAC 8 automatic tax reporting on crypto activity. So this means that there will be very tight on taxation because the government wants that money, especially Spain, which pretty much relies on tourists most of the time. It's not to the extent of Greece, but Spain is heavily reliant on tourists, and they kind of want to change that. And I guess this taxation is going to be good for the government. We'll see. We'll see what happens. EU mandates crypto exchanges to report user data and transactions to tax authorities from 2026. Again, for people living in Europe, this is another wake-up call. You have to be careful. Self-custody is the best option as always. So make sure you have your ledgers or whatever wallets you're using. Try to spread out through multiple wallets, cold wallets, and don't keep the money on the exchanges. The exchanges are for exchanging, not for holding long-term or hodling, okay? So this is just another wake-up money. The guy here says they ran out of their money, now they want yours. I don't think they run out of their money. I think they just want your money. I think they're just greedy and they want all the money that they can have. So yeah, that's the breakdown regarding all of the news. If I missed anything important that happened, just let me know. Let's go to the CME FedWatch, and this is our numbers for the next Federal Reserve meeting in January, specifically January 28th. So the expectation is 84.5% that we're going to be, that we won't have a cut, essentially. It will be a no change. And 15.5% are expecting a rate cut. Now, the reason this is because of what Jerome Powell said is that they don't expect to have another cut on the next meeting, or he hinted towards that. So that is why the markets shifted drastically in their expectations. And by the looks of things, we will not be having another cut. Now, is this Jerome Powell trying to make it more difficult for Trump and trying to, because we all know that Trump wants his rate cuts. And if we even take a look at the expectations here for, where was I? Give me 1 second. I wanted to pull up the Polymarket expectations for the next Federal Reserve chairman. Let me try to get that. I had it open somewhere. That's not it. That's fine. So poly market, Trump chairman pick expectation. Let's just who will Trump announce as the next? I think that's the one. So Kevin Hassett is essentially leading the charge with 54%. And then Kevin Warsh is the second pick, and then Christopher Waller is the third, Rick Reeder is the fourth, and the fifth is Scott Bessent, which was the favorite from what I remember back in the day. But as of today, Kevin Hassett, and all of these guys are, from what I know, or at least most of them, I definitely know Kevin Hassett and Scott Bessent are pro rate cuts. I think Kevin Hassett is the most, is the guy that wants to cut the rates the most. And this is what Trump wants. Trump wants the rates to go down. And I think partly why he wants that is because he wants the markets to rally so that he can go ahead and say, hey, look at these markets. Look at how well they're doing while I was the president. Look at, we got Bitcoin to 100. We're going to get Bitcoin to 150 and 200K during my presidency. I think that's part of the reason why he wants the rates to go down. But again, we're going to take a look at the reports regarding the inflation and unemployment, and you'll see that the Fed has no option but to cut rates at the moment. But yeah, that's the expectation for the January Federal Reserve meeting. These numbers can change anytime, so it's not like you have to expect this with 100% certainty, because if some event occurs, something happens, and the markets are going to change their probability. So just don't be fixated on this too much. And these are the numbers for March. It looks like the vote is split between a cut and a no change. But again, this is far out. This is March. This is 3 months from today. Now let's take a look at let me see. There we go. So the GDP numbers are going to be coming out on January 22nd. So the forecast is 4.3% growth compared to the 3.8 of Q2. Or sorry, Q3. This is the unemployment rate. So for November, we were sitting at 4.6%, and it matched the forecast of 4.6%. This came out on the 16th, and this is bad news. This is bad news for the U.S. government, and these numbers probably are not even accurate, because a lot of the numbers that the U.S. government is posting get revised later on, heavily revised, heavily. So the numbers that we're getting right now for new job applications and for new employments are going to be revised later on. This is something that Jerome Powell mentioned himself. So there is, the unemployment rate is rising. The next forecast is 4.7% for the month of December. And we're getting the update regarding that on January 9th in a few weeks. And we'll definitely update you with that when it comes out. But the forecast is not looking good, and unemployment just keeps rising. Again, this is the government numbers they're giving you. But the actual numbers, we don't know. We don't know. And this is part of the reason why the Federal Reserve is going to be forced to cut rates. And Jerome Powell and the Federal Reserve just thinks everyone are a bunch of donkeys, and they don't see through them, because these guys caused inflation. Then they talk about bringing the inflation down. They talk about the ordinary Joe Schmoes having to suffer because of what they did. They print trillions. They cause inflation, and essentially they don't have the inflation under control. They don't have the labor market under control. So they're failing as the Federal Reserve, because they have a dual mandate to make sure the inflation is in check and make sure the unemployment rate is not too high. So these guys have done a terrible job. Again, Jerome Powell was appointed by Trump, and now Trump hates him. So, I mean, it's just a circus show. All right, moving over to the CPI. We got our update for the month of November on December 18th, so just more than a week ago. So the previous inflation was sitting at 3% for the month of September. October, the government was in shutdown, so we're not getting the numbers for that. But for the month of November, the forecast was 3.1%. Inflation is 2.7%. A lot of people were happy about this. A lot of people are like, wow, look at that. The inflation is going down. But that's not the case. That's not the case, because this is not showing us that the inflation is going down. This is simply showing us that the rate of inflation has just slowed down. Inflation is continuously growing. It's just the rate of inflation has slowed down from month to month. So this is not a good thing. This is way past their 2% target. And again, this is if you believe the numbers that the government is showing you. They choose the basket of goods based on whatever they like. And we can see in the States and in Canada, the prices are rising quickly. And these guys are not doing anything about it. They're going to be printing trillions of dollars. I mean, this is a joke. This is an absolute joke. So this is the way you should take this information, right? This information is coming from a bunch of jokesters and clowns that think we're a bunch of donkeys that are going to listen to whatever they say, and you know, we can't see through the numbers. Just because the numbers are saying one thing and we can see a whole different picture in front of us, while these guys come out in their suits and their prepared speeches and they do their every 3 seconds, like Jerome Powell likes to cough and you know, pretend to be so righteous and non-biased. I mean, it's a complete joke. But that's I apologize for the little rant, but you know, sometimes we have to mention these things. Okay, so the next report is going to be coming out, of course, next month. For the month of December, we'll see what happens with inflation during that time, but just 1 second. Okay. All right. So like I said, we're going to be doing a video on Canton Network on Patreon after this drops. After this live stream ends, we're going to be dropping a video on Patreon regarding this coin. I think this is going to be a very good pick for anyone who's looking at RWA coins. And right now what we can do is we can go through some assets here and see what's happening. So the S&P 500 all-time highs being printed at the moment, and this is very, very typical for year end. The same thing happened in 2024, and the same thing is happening right now. Obviously the peak of the previous cycle was in December 2021 / January 2022. Then we crashed. So the end of year is usually where the markets start going up. And this could continue into the spring of 2026. Same thing for gold and silver. I mean, and just so you know, we talked about silver in the summer. So we talked about silver, I think, when it was sitting somewhere around $35 an ounce. Right here, sometime in August, July, we spoke about silver, and look what it has done since. Obviously, you do not want to be buying something this overbought. This is too much, so don't buy silver. Of course, not financial advice, but you do not want to be buying these vertical lines. You want to be buying when there is a correction. Look at the RSI. This is extremely overbought. So just wait for a correction, and you know, you can hop in whenever there is a pullback, because silver is going to be in high demand again because of EVs, right? Electrical vehicle batteries, because of the fact that silver is being used in the military, right? This is the best metal for the best electricity conductive metal, right? Right behind it is copper, but it's cheaper because it's not as good as silver. So silver is used by the military for EV batteries and for what are they called? The sunlight batteries. I'm blanking on the name, but essentially the batteries that take the energy from the sun. I'm blanking on the name. My God. So because of the demand for silver in all of these different sectors, the price is actually rising. So the production levels have stayed the same, but the demand is increasingly rising exponentially, and this is the result. So I will be, I'll let everyone know whenever I buy silver on Patreon, but I am planning to buy silver when there's going to be a correction. Not at the moment. Right now, this is very expensive. Now, Nvidia has seen a pullback from its top there of approximately 20%. Now it's sitting at $188, which is fine. It's a nice area to dollar cost average, but again, do you want to be buying when the monthly RSI is this high? I would say there is going to be a pullback, so just wait for a pullback. Of course, none of this is financial advice. And this is the total crypto market cap. Let's remove all the drawings. This is the monthly chart. You can see we're bouncing off the 20 EMA. What we want to do here is we want to hold the yellow line. We want to hold the 20 EMA, and we want to have a bounce just like we had back in April 2025, in August, September 2024, because this is essentially your bull market band. If you start dropping below that, you go into a bear market, just like you did here in 2022. Plain and simple. So it's important to see how we close the month of December. We want to close it above the 20 EMA on the monthly chart. And let's go through some coins here that I think are going to be good picks during this pullback. Okay, so we're in the RWA protocol tokens by market capitalization on CoinMarketCap. So we did mention Avalanche, Chainlink, and Ondo at the beginning of the live stream, but let's go down the list here and let's try to pick more coins. So one that I would look into is Injective. Definitely Injective, $500 million market cap. This has the potential to continue going, and this is a solid pick in my opinion. Origin Trail, another RWA coin that a lot of people have been talking about. Reserve rights, some people like it. To be honest, I can't remember what the project is all about. It is an old coin though. It is a very old coin, so be mindful of that. But let's go to about over collateralization for reserve stable coins through staking and governing them through proposing on voting. Let's go to their website. The world's asset income on chain. Reserve lets anyone bundle them into an index. Okay. Endgame asset backed world reserve currency. So they do have big plans, big aspirations. So Reserve is a platform for decentralized token folios, DTFs, like ETFs, but for crypto. Annualized protocol revenue, $4.1 million. Security audit spending, $2.8 million. Asset in reserve. Total value locked. They don't have that because they don't have a reserve apparently yet. So yeah, feel free to look into this coin. I don't have any reserve rights. Synthetics is another coin that a lot of people like and they keep mentioning it. Mantra, we sold this at its peak and we got out of this in time, thankfully. Centrifuge, another coin, another RWA coin that I would recommend you guys look into. Clearpool, I think this is something that Alex Becker even talked about. So take a look at Clearpool, take a look at Proppy. Plume is something that I have looked into before, but when I looked into it, it seemed overbought at that time. It is listed on Binance. It's a relatively new coin. Let's go to the website. Assets in pipeline 5 billion, ecosystem partners 200, ecosystem community technology, seamless RWA distribution, fully end-to-end, $317 million in their TVL. So TVL is their total value locked. So the total value of all the assets that they have under their possession right now. And when the TVL is bigger than the market cap, that essentially shows that the project is undervalued. So I would definitely look into Plume simply based on the fact that it's undervalued. Let's take a look at the token inflation. Oh, I don't like looking at CoinMarketCap for token inflation. I like to go to cryptorank.io. So let's go to Plume Network. $63 million is their current market cap. So their total supply is 10 billion tokens. Circulating supply is 33.3%. MasterCard is an investor into Plume. Let's take a look at the vesting schedule. I have to log in. Okay, I'm not going to do that right now. But they do have some unlocks here. Let's go back and take a look at the unlock. So 14 point, so it's going to, there's going to be a big unlock coming in January for Plume, 14.6%. So we might have a price drop in January. That's going to be a good time to pick up Plume. So look into that. That's definitely going to be, that's something to keep an eye on. Okay, so I don't want to go too low into these low cap coins because obviously we mentioned some of them on Patreon. All right, so we went through the RWA coins. Let's go through the AI coins. Obviously, Tensor, Near Protocol, these are always my top picks. Injective is also in the AI category, just like it is in the RWA category. Take a look at Render. I think Render is a good pick, good solid pick. Some people like ICP. Personally, like I don't know if it's gonna do the same numbers it did when it was launched back in 2021 in December. I remember the hype around it, but it hasn't done nothing essentially in this cycle. Take a look at virtuals. Take a look at the Graph, which is one of the oldest AI coins, but it's been in the market for quite a while, and it's definitely a solid pick. You can take a look at Aether. This is a coin that I do own at the moment, and it's a great time to dollar cost average. A Cash Network is something that went, I think, did good numbers at Cash last cycle or like this cycle. Yeah, it did more than a. Look at June 2023 was sitting at like 20 cents, and it went up to $6. So that was a really, really good move for a Cash. You have AOS, which is something that Alex Becker is bullish on. Grass, I personally sold Grass with with some profits, and we got out of the project because it wasn't doing a lot. And Arkham. And Arkham did disappoint, to be honest. I still have Arkham coins. I haven't sold them at a loss or anything like that. But I was expecting a stronger move to the upside. We'll see with the next alt season. There is token dilution, of course. There is token dilution. It's not a lot, but it's on a daily basis, okay? So it's 0.12% every 2 days of the total supply. So there is an inflationary aspect to it, but it's not massive. But definitely something to keep in mind when buying. You know, you have to take a look at the tokenomics for all the projects that you're trying to get into. Fala network is something you can look into. AI XBT, you know, these are already like low cap coins, so you know, make sure to be very careful buying into them. You don't want to put in a lot of money. And this is something that I learned this cycle, is that I did have a lot of assets at hand, right? So for the next cycle, I'm going to try to shrink down my portfolio, and we're going to try to go with a smaller portfolio. All right, so we looked at a few coins, we went through all the news, and we can quickly take a look at Bitcoin here. So Bitcoin is below the 20 EMA, and you can see that it hasn't dropped below the March 2025 low, which is important. That's a good thing. It hasn't dropped. It's retaining this channel up pattern, right? So as long as we have higher highs and higher lows, this is an uptrend. We're good for continuation. But the moment we drop below $76,000, you know, it's not going to be looking good. We might have a bounce off of 76,000, right? And everything can happen. We might have a bounce, and this could be a nice double bottom pattern, and then we go up to 150K. That's also a possibility. But if this loses $76,000, we can apply a fib and we can see what our potential targets are going to be looking like. So we apply a fib here. We're going to be looking at $42,000, which is this, you know, small accumulation level we had at the end of 2023, beginning of 2024. That's going to be your 1.618 target, $42,699. It's going to be an amazing buying opportunity for anyone looking to buy Bitcoin. So make sure you save up some money on the sidelines. Like every single week, you can put away $100, $200 from every paycheck and save it for a big crash. I would even recommend having that money on the exchange or on a cold wallet, so that when the day comes, you don't have to waste your time trying to deposit the money onto the exchange, because a lot of the times these exchanges, these you know, as the Brits would say, these cheeky exchanges, they're very cheeky. They're not going to let you deposit when the prices are down. They're going to, you know, create a lot of these technical errors and issues where users cannot deposit money. They cannot buy these coins at cheap prices. But then when the prices go back up slightly, at least from the bottom prices, suddenly the technical issues go away. And I'm not saying all of the issues are, you know, fake or manipulated, but there is general, you know, consensus in the community that when we have these crashes, you can't really buy cryptos at these low prices. So the institution, the big boys, buy in at the low prices, while the everyday retail investor can't. So in order to protect yourself from that, you want to have the USDT, the USDC, the stable coins ready and set to go to be deployed whenever there's a crash. So you just log into your exchange and you start buying. So that's just, you know, something you can try to do. Of course, not financial advice. And something that I'm always tracking is the Swiss franc against the Canadian dollar. I'm personally buying into the Swiss franc because it has been doing incredible against the Canadian dollar for the past 25 years or so. for the past, yeah, more than 25 years at this point. Actually, no, I'm mistaken. Yeah, it's actually for the past 17 years. So the past 17 years, it's been a massive uptrend against the Canadian dollar. We all know that the Swiss economy is very stable, and this is why you want to be selling your local currency into something stable like Bitcoin, gold, or if you want to be more liquid, you can do it into a different currency that's also inflationary. Obviously, it's also paper money. However, it's not as inflationary as your local currency, as the Canadian dollar or the US dollar, for example, or the euro. So you will not be losing your purchasing power as quick as you would have been with your local currency. That's why you protect yourself with the Swiss franc. And then when the time comes, you can always trade it back. Or let's say you've been buying Swiss francs for the past 17 years since January 2008. Okay? And then you end up selling, let's say today, you'll be up 111% in value of your Canadian dollars than you would have been if you simply kept your Canadian dollars with you. So this is something to keep in mind, and this is one of the safer ways you can protect yourself against inflation. Even though it's not the best way, but I like to stay diversified, so I am starting to invest into companies, right? Through some contacts that I have, I'm starting to invest into commodities now, and well, starting to get into that. We're waiting for gold and silver to drop down, and I'll be expanding my portfolio because you don't want to be 100% in crypto. Okay? And I think that's a good way to wrap up the episode here. Hopefully you guys learned something useful. Let me know what are your thoughts on the Federal Reserve, on the whole situation with inflation. We covered it in great detail earlier in the stream, so make sure you go through it and watch all of it. And make sure to join us on our Patreon. I'm going to be dropping a video on Canton today. And, there's been a lot of stuff going on in my life recently, so unfortunately I wasn't able to stay as active as I usually am, but I promise you I'm trying my best. So we are going to try to go back on these live streams. Hopefully, if everything is according to plan, we might be even able to do it on a daily basis. So I hope you guys have, a great time if you're celebrating. I hope you guys are safe, and make sure you spend some time away from the screens, away from the markets, and, spend time with your family. Thank you all for watching. Stay safe, everyone, and